Hello, everybody. So today I just wanted to cover the stock market and just what happened today on March the 2nd. So I noticed that you guys really enjoy these videos, so I'll continue doing them. So without further ado, let's just jump right into this. So technology definitely outperformed today. We had consumer services, kind of stale, not too much. Consumer cyclicals, pretty stale as well. Manufacturers definitely did pretty well. Um, Consumer defense was not as green as everything else, but keep in mind that they've been doing pretty well these last few months. And oil definitely doing well. And not seeing too much red here. I mean, really just right here on Netflix and whatever this is right here. So let's go to 3-month performance. Now, here is where you see the true picture of what's going on in the stock market. So we see technology selling off, semiconductors selling off, communications, consumer cyclicals, and what's actually green. Some pockets of financial. We see pockets of healthcare. The consumer defense sector is doing pretty well, and energy definitely doing well. So let's just jump into charts. So with QQQ, Nasdaq, one thing I want to point out is that the 50-day is curling under and it's starting to move under this 200-day moving average. So to me, when this happens, you see a lot of wonky things in the market and you see a ton of volatility. So one thing I also want to point out is that we're currently touching this downtrend line. So I don't quite know what's going to happen. I mean, to be honest, I think that this could fall a little bit more. But for me to want to be more bullish on the Nasdaq QQQ, I would want us to go above this 20-day moving average. I would want us to go above this old high, which is right around here at 374. So that would actually have to be over the 200-day moving average and the 50-day moving average. Now, do I think that we could do that in the short term? I mean, right now I'm not quite feeling it with this 50-day moving average basically going slightly under the 200-day moving average. So definitely be cautious. I mean, in these next few days, we could see a lot of crazy price action. So going on to the S&P 500 SPY, see something very similar with the current price action right at the trend line. So same thing, for me to want to be bullish on SPY, we're going to have to, first of all, be above the 200-day moving average. And then we're going to have to get past this old high right here at around 458, which will basically take us above the 50-day and the 100-day. So in the short term, where do I think we could go? Well, I think there's a possibility we could just go straight down to 428 again, or there is the possibility that we could squeeze up to 442, and then maybe even the 200 moving day average. So with Apple, now Apple is definitely a little crazy near the close, and I do want to point out that we're basically right on this downtrend line, and we have some pretty significant resistance right here at 167.32. And what I think Apple could do in the short term is I think we could just move between this 100-day moving average and the 50-day moving average. So that basically gives us about, let's see, about $7 back and forth. So I think we could see a lot of chop. But given that we just touched this downtrend line, I think it's also very possible that we could fall under the 100-day moving average as well. So for me to want to be more bullish on Apple, we would need to get above this resistance right here, above this trend line, this downtrend line, and then we would want to get above the 50-day moving average. And then we'll be right around the top of this trend channel. So I do need to extend this a little bit further. Then with Microsoft, I was actually surprised that we closed above the 200-day moving average. I mean, when I look at the price action near the end of the day, I thought that they were going to try to take this underneath the 200-day moving average. So let's see what that number actually is. So it's 298.73, but here in the pre-market, we're actually below that. So, I mean, take that with a grain of salt. Pre-market or post-market is always a little crazy, and it's never too reliable. So here on Microsoft, we're still in this downtrend channel. We slightly broke above it, and we're also in this broader trend channel. So I do think that if we do get bullish, I mean, we could make a $9 pump here to the 50-day moving average, but essentially we want to get above this high right here at 315, and then this will start looking a little bit better. One thing I do want to point out is that the 20-day moving average is starting to cross under the 200-day moving average, so definitely something to be a little bit worried about. XLF, you can see that we're moving in this trend channel right here. We are currently below the 200-day moving average. One thing I really want to point out is this triple bottom right here. You can see that it's right around 36.82. And for me to get a little bit more bullish on the financials, I would want XLF to be above this 200-day moving average at 38.43 and above this resistance level right here at 38.91. Now you can see why that's resistance. We got this gap right here, that gap right there. We got this top, and you can see this massive sell-off right there when we broke under that. Now, the VIX, this is one thing I really want to point out. So we had this pretty green day today, but the VIX didn't really give a whole lot. You see, we're still over 30. So for me to actually want to get bullish on this market again, I would first need to see VIX fall all the way down to 27.23 and then break that, fall down to 24.69, and then eventually break underneath this 22. Then I would feel a little bit more comfortable. And as you can see, we still have the full bull trend. And when we zoom out, this basically looks like a parabola, upside down parabola. I guess not upside down, but you know what I mean. So XLE, definitely doing pretty well here. Now if we zoom out here, we're basically at the top of this trend channel right here. So maybe we cool down a little bit and we go down to 71.47 before we rally up again, or maybe we fall for whatever reason. But you can see that we broke past this resistance level here. I think it could be possible that we could even go as far as 78.33. So definitely something to keep an eye out on. Now, when we look at the moving averages, definitely bullish. Now, I also wanted to point out SOFI. So I know a lot of you guys are in the stock and you're probably very excited about today's rally, but we faded off quite a bit. And one thing I did want to point out on SOFI, we're in this downtrend channel, as you can see. And what happened today was that we basically hit this 50-day moving average and we rejected. So you can see quite a bit of selling volume. And one thing I really wanted to point out is this volume right here, 146.45 million. So about 146.5 million. Now, let me just show you what the average trading volume on SOFI is. So here you can see SOFI generally trades around this 70 million, this 50 to 70 million range. And you can see obviously yesterday, I think yesterday was earnings. So volume definitely pumped. But today we have even higher volume and we're selling off. So to me, that's not a good sign. I don't really know what SOFI reported because I don't actually follow this company too much. But I'm seeing a sell-off on high volume and a rejection of that 50-day moving average. And you can see we rejected the 50-day moving average back here in January as well. So to me, I would say definitely be cautious because these are the things that I don't like seeing in the charts. Now, I also forgot to mention, so here on the S&P 500, our volume actually wasn't too high. Average volume on the S&P 500, you can see right here is about 110. And this day back here on near the end of February, we actually hit around like 200 million volume or so. So this is actually pretty low volume right here. I mean, it's slightly above average, but given that today was a green day, I mean, for me to think that the market's getting more bullish, I would want to see strong volume and us breaking above resistance to be a little bit more bullish. So one last thing I wanted to go over was just the S&P 500 seasonality. So we're going right here into March. And one thing I wanted to point out, this is a 20-year range. So this is just 20 years of data that's kind of been averaged. So the S&P 500 generally it's generally not too happy in March. So you see a lot of chop in March. Basically, you can see in the beginning of March, we go up a little bit. Mid-March, we fall quite a bit. And, we have like another cut here, definitely towards late middle March, I would say. And then once we flip that new quarter, you can see that the S&P 500 generally rallies. And another thing I wanted to point out is that a lot of corrections are generally over by the end of the quarter. So this correction really started, let's see, really started here around early January. So the new quarter is going to happen here in April. So, maybe we could fall a little bit more and then maybe we'll see something more bullish when the new quarter starts. So, of course, take that with a grain of salt. This chart isn't always right. And with that, I hope you guys enjoyed this video. Thank you very much.